Hey everyone, welcome back to Top Business. Earning money is important, but what's more important is keeping track of your money. This video gives you just the right advice on how to deal with keeping tabs on what you're doing with your money, be it your bills, savings and debt, or travel fund. We're going to discuss 10 places your money needs to go. Stick around till number 1, you don't want to miss a single piece of advice. Number 10, save automatically. Saving, although very important, can still prove to be very hard at times. Setting up automated savings is the most efficient way to save. This savings mode puts excess cash out of sight and out of mind. Automatic saving means you have a means to save at regular intervals, whether monthly, weekly, or even on a daily basis. You can request a standing order or direct your banker or employer to remove a specific amount from your paycheck each time and transfer it to your savings account. Automatic savings work because you don't have to think about how much you need to save. It can also help you achieve several financial objectives, including saving for a down payment on a home, saving for your children's education, creating an emergency fund, and saving for retirement. Most automatic savings accounts are secured or have a penalty for a quick withdrawal, so your money accumulates in a dedicated account that cannot be spent. Pushing yourself to save automatically is the best way to save. After all, you can't spend what you don't have. As your wage increases, so should your savings. If you secure a new role at the workplace and you earn an extra $150 more each week, consider keeping at least 10 to 15% of that, or an additional $20 a week. Number 9, retirement plan. For a happy retirement, you have to start saving up early. The first step is to kickstart a savings scheme. Even if it's just a few dollars a week, set up a bank account and save the money. While a bank account isn't the best form of investment, it can be a great way to start making a saving habit. Remember, creating a retirement fund is a long-term journey, and, as the saying goes, the journey of 1,000 miles starts with just a single step. Commit to the effort and continue improving your position by decreasing your debts, growing your income, and enhancing your education. While the early years will be a trial, with every year the advancement that you have executed will become more evident. Number 8, checking account. This one is very important for every person who earns, be it a starter or an expert, is to deposit the inflow of money somewhere. And the first thing you need to do is direct your paycheck into your checking account. A checking account is a typical deposit account held at a commercial institution that allows many deposits and withdrawals, as opposed to liquid savings or investment accounts. Checking accounts have numerous advantages. Number 1, instead of accepting a paper check from your employer, annuity provider, make use of a direct deposit. Your money is transferred straight into your checking account. You gain quicker access to your money, save time, and avoid the challenge of visiting your bank every time you get paid. Number 2, in addition to writing checks, you can regulate your cash in your checking account via different channels like a bank branch, ATMs, mobile website. Various points of access allow you to conveniently and swiftly deposit or withdraw money when you need it. Reasonably, this is one of the best advantages of a checking account, as it also enables you to save time while achieving peace of mind. Number 7, emergency account. No one can say when an accident might arise. If you're not prepared for an emergency, you might have to incur a huge loss. That's where an emergency account helps you. An emergency account is a bank account with funds set aside to cover huge unforeseen expenditures, such as a sudden medical expense, home appliance repairing or replacement, important car fixes, and, most expensive of all, unemployment. This account doesn't make use of ATM cards, and often sits, referred to as an airbag, in a way that protects you should you lose your job, you can't walk, or are disabled. This account should have a minimum of 6 months' expenses set aside irrespective of the security of your job or how many personal savings you have. Emergency funds form a financial cushion that can keep you floating in times of desperate needs without having to rely on credit cards or take out high-interest loans. It can be especially important to have an emergency fund if you have debt because it can help you avoid borrowing more. Having an emergency reserve is a must. Think of it as a crash absorber that absorbs the blows of life, which will keep you from adding to the amount of debt that you owe. The recent coronavirus pandemic outbreak has mirrored significant attention to having an emergency fund should a crisis hit. Number 6, dream account. Everyone has at least one dream that's sort of expensive. But no worries, a dream account can help you get there. Dream accounts are intended to encourage people to save money to meet a dream goal. The goal might be to go on vacation to the island of Lake Titicaca, Bahamas, or Mexico, or have a destination wedding in Santorini, Greece, or to get your kid into college. Some amount of money can be automatically withdrawn and saved to this new account from your checking account. Even your wildest dreams are tameable when you have the finances to fund them. If your goal is a short-term dream, your money should go into your money market or certificate of deposit investment account. If your dream is about 3 years, then it should go into a short-term bond fund, while if it's for about 5 years, you can start looking at stock funds or balanced funds. Number 5. Credit card bills. As most of you know, credit cards are very handy financial products that can be used for everyday acquisitions such as gas, groceries, and other goods and services. Your credit card bills should be automated. If you owe money on your credit cards, the most sensible thing you can do is pay up the balance in full as soon as possible. A majority of us pay the most of our bills online by entering our bank or credit card information on our billing company's websites. Suppose your credit card is due on the 10th of every month. You can set up an automated system with your bank to have the minimum payment required for the credit card to be moved from your checking account to the card. But remember, you have to pay up the credit card. For example, if the monthly payment is $150 every month, you should have the money paid 2 days before it's due to avoid late fees and ensure your credit score is kept intact. It's great to pay more than the minimum amount. Number 4. Regular bills. This advice is very simple. Automated paying your bills is a much more straightforward process. It can save you money, free up time, and make things much more comfortable. You should start by setting up automated checks to pay the bills that are a set amount each month. Most businesses offer the choice of signing up for an automated check. It's advisable to do an electronic check only with the bills that are the same each month. You can also set up recurring bills from your bank account. Some firms charge a processing fee for automatic payments, so you may be better off setting it up and be charged from your account automatically. Subscriptions to services like Netflix, Amazon Prime and Spotify, or cable networks usually fit into this category. Rent or mortgage payments are other options. Likewise, insurance payments will also fit underneath this category. This method will help you to track your expenses more effectively and prevent you from overdrawing your account. You can set up notes that will let you know when your payments should be drafted from your account. It will help you keep running stably on your checking account and reduce the plausibility of overspending. You can save on banking fees if you halt yourself from overdrawing your account. Number 3. Charity. Imagine how great it'd be if you not only earned for yourself, but you could also help others. Being able to give back to those in need helps you achieve a greater sense of personal satisfaction and growth. It is essential that as your money comes in, a fraction of it goes to charity and helping people. It's been found that over time, people who build an enormous wealth are people who gave to charity before they were rich. Giving to charity has some benefits, like getting a tax deduction, promoting generosity in your children, improving personal finance management, and also bringing more meaning to your life. Give it a try. It's bound to make you feel good. Number 2. Paying off high-interest debt. Try to stay out of debt as much as you can, but it can still arise however cautious you are. Your debt is an emergency, so you need a debt rebate plan to reacquire control of your money and life, whether you have a small amount of debt or a mountain of the stuff. The longer interest accumulates on a balance, the more likely you'll repay. Compound interest makes this even more difficult and challenging because it means you'll be repaying interest charges on your current accumulated interest every month. It's hard to grow assets when you're pulled down by debts. A report from the Urban Institute shows that nearly 1 in 3 Americans have accrued debt. The financial and emotional damage of consumer debt, especially at astronomical rates, makes it a financial enemy number 1. By paying off multiple high-interest debts, you'll be paying little in the long run by obtaining a lower interest rate on your new account, if you have a good to excellent credit. Prioritizing debts with the high interest rates will save you more money and allow you to redirect funds to other financial goals faster. Number 1. Open a liquid, taxable investment account for midterm needs and projects. People usually talk about short-term and long-term financial needs and goals. Emergency funds aid and protect you in the short term. Retirement investments help guarantee your financial future. But if you're only taking care of the short and long term, you should leave something for the midterm also. Taxable investment accounts offer attractive tax benefits, exact fewer restraints for investors, and have numerous benefits like: Number 1. Flexibility. You can withdraw your money at any time for any plan without having to pay income taxes or a penalty. Number 2, you can use your investment account for retirement, college expenses, a car, vacations, or even your savings account, and you won't be charged or pay any penalty for using it. Opening a regular taxable investment account will help you set aside some funds for a boat, excess educational costs, a closely held business investment, or the down payment on a second home. This money should be invested per the time frame for its use. These accounts not only offer flexibility and freedom to account holders, but they also require responsibility and maturity to ensure the money is used for its planned purpose. While you are here, go ahead and click on one of these 2 videos on your screen. See you there!